Whenever I bring on a new money management client, I spend a lot of time, or much more time than probably the average money manager would, educating the person on my approach, my strategies, how they're different, how they're the same, how they can feel bad at times, how they can feel great at times. And the only time I really get concerned is when the new money management client is kind of like, yeah, okay, yeah, just go do it, just yeah, whatever. Like I can tell they're not listening to me, and that actually starts to concern me because it means they're really not listening and they don't really understand what they're kind of buying or getting into. And so I really then slow down and impress upon them, and I go back in history and show like what a short-term correction can look like and how that may feel to them. But still, it's only knowledge-based information and not experience-based information. And so when that first big correction comes, there's kind of a learning curve to it. Well, I've been feeling actually kind of anxious and stressed lately, and you may think it's because of gold falling. It's actually not. It's because the stock market's going up. And this may sound weird to you if you know my strategies, considering that two of my four strategies are doing exceptionally well because they have to do with the stock market or individual stocks in the stock market. So you would think that I should be elated that those two are just cranking higher, while a third one is almost completely neutral, and the fourth one is taking a hit, though I'm actually not worried about that fourth one. So what I want to do is talk with you about why what I'm feeling is what I think other people are feeling. In fact, what I think professional investors are feeling, and not just, a professional investor at Merrill Lynch or Raymond James or Edward Jones. I mean like the real guys, the ones who run multi-billion dollar hedge funds or private equities, and they've been in this business for 10, 20, 30, 40 years. And while they're starting to get anxious and stressed about what's going on. And so what I just want to start with is Steins Law, which is something that Herbert Stein came up with, which is just basically if something cannot go on forever, it will stop. And that's kind of what's happening today. And what's happening today is investing is looking really easy, right? Investing, when it looks its easiest, is when it's hardest. And long-term investment success can often come at the price of short-term underperformance. And people who lose over the long term are striving to be right over the short term. But we are here. Japan is printing $85 trillion a month. That printing is going into the stock market directly. It's going into bonds. It's getting pushed all over the world, not just in Japan. And I want to talk about how that is increasing the stock market. And I want to show you this price chart right here. This is the Japanese stock market from November of this past year to yesterday. And you can see that it is almost perfectly going up in a logarithmic angle. Like it's a beautiful looking logarithmic price chart. And you typically don't find these that often, especially on the index of one of the largest economies in the world. And what you're looking at is about a 50% increase over the last 5 months. So this is unnatural. We know why it's going up because Shinzo Abe is going to print Japan out of the mess they're in, even though their debt to GDP is 400, 500% of GDP. It's a number so large that it doesn't even care. It doesn't even matter what it is anymore. It is just ridiculously large. Now, if we were to extract this into the future and say, well, maybe they'll do it one more year. Maybe they'll do it 2 more years. But they just started. They just started this. So let's just zoom out into the future and look at what this logarithmic move may look like going into the future. And it's pretty impressive. I mean, we could have a double in the stock market from here. And now I'm showing you the price chart of the Japanese stock market, the Nikkei. But the Nikkei being at 15,000, it peaked at 40,000 in May of 1989. So to get from where it is today to 40,000, it would have to double and then go up another 60% from there. So anything is possible my fear and my stress doesn't come from gold falling. We'll talk about that in a second. It comes from what happens when this stops. Is the assumption that the whole world will be better off once this stops? It's just like, how do you end this? How do you stop the heroin? And I doubt it's going to be a nice slow stop with no skid marks or no brick walls. Like it feels really dangerous. But this is what's going on right now, and we have to go with this. And that's why having market probability be fully in the market and obvious trend be fully exposed to the market is one of the reasons why those two strategies are really doing well. And they both have their safety nets. They both have their stop loss mechanisms. And so what's happening is it's not just that Japan is printing 85 billion, I almost said trillion, 85 billion a month, and the US is printing more than 85 billion a month. True, they are the last 2 months. But what you have on the screen here are the interest rates of Japan and the US. And so look at the red line here. That is just showing you, if you go along the x-axis, the bottom axis, you can see that a 5-year, if you let Japan borrow your money for 5 years, they'll give you maybe 0.15%. If you want them to borrow your money for 10 years, they're going to give you about 0.5% a year for 10 years. Now, think about this. They just diminished the purchasing power of the yen 30% against the US dollar. So what's happening is people are borrowing in the yen because it's just getting inflated away. And they can just come over here and buy the US Treasury for 10 years at 1.8%. And maybe they lever that up or not. But what is happening is this is also pushing Japanese people outside of the Japanese bond market and the stock market too. And that's also pushing up the US stock market. I mean, it is so amazing that in some ways I'm just in awe that it's happening, but it is happening. This is not a dream, it's actually happening. The other thing I noticed is if you look on the screen, this is a price chart of gold going back to March of 2011. But really what I want to just focus on here is where the Bank of Japan's, basically the Ben Bernanke of Japan, Kurudo, came out and said, hey, we're starting this, we're doing this. That happened on April 4th. And this is what gold did right after that. Now, was it manipulated? Did some huge hedge fund come in on margin and push it down? Of course, anything could have happened. I'm not interested as much as why it happened, as long as it's not a fundamental shift. And it not only is not a fundamental shift, but in fact, the fundamentals are getting better for gold, and I'll prove it to you in a second with one price chart. But this was an amazing move down in gold right after the speech of one of the largest central bankers in the world, probably the third largest central banker, depending on how you're measuring it. And so this pushed down gold. But check out what happened here. This is the Comex gold inventory. So the Comex is one of the two paper gold exchanges. You have one in London, you have one in New York. Look at what is happening with physical gold. It literally is going away. This is the Comex's inventory of physical gold. Notice here, it kind of leveled off at about 11 million ounces, and then it absolutely collapsed down to just below 9 million ounces. They just lost over 2 million ounces of gold because people took physical delivery. So my question out to the world and the universe is, at what point does Comex stop allowing delivery in physical gold, and they're going to start having cash settlements? Because they can do cash settlements. But this is happening right now, and that's why I'm actually not worried about the gold correction, but I'm more worried about the stock market going up, because it is going up with all this manufactured manipulation and intervention. So the takeaway is, when things can't last forever, they're not going to last forever. Have a strategy that can adapt to what's happening, not what you want to have happen. This is not about morality. This is about what's really happening, and you have to position your money based on what's really happening. Coming up this Tuesday, May 14th, starting at 6 p.m. That's a different start time. I used to start this at 7, but I'm going to be moving it up each month because I have a lot of clients on the East Coast. Of course, I'm going to stream it live online, and it's my monthly strategy gathering where we're going to go over the gold market, the stock market, the real estate market. I just added a great investment for real estate to the obvious trend. Of course, live extensive Q&A, having you connect with me. And of course, I'm going to update the strategies, and if we have time, go over market X-ray. And I want to show you something that's so remarkable that's going on in currencies that the market X-ray has picked up on it. I hope you guys have a great weekend, and I will speak with you very soon. All right, take care.